Yeah, melt up, right? And these melt up markets, boy, these buyers cannot be stopped right now, can they? Well, back to work tonight, guys. Thursday evening, after all. It's July 22nd, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, boy, it's great to have you with me, because my job tonight is to help us find the best trade setups for tomorrow. That's Friday's trading session. I got a great video in store for you guys and gals. Charts are already in the background, as you can see. The S&P's here, Nasdaq's here, gold is always here with us, and glad to see you are here, tuned in with me here on this video. Boy, oh boy, where do I begin? Like I said, melt up markets, everything very bullish right now. Gold is bullish, trying to complete the pendulum swing, maybe a slingshot reversal on the gold for tomorrow. Nasdaq bullish, S&P bullish. Looks like the E-minis are trying to get those all-time highs again. Got some great buying opportunities. Would love to buy some dips on these bull markets, and we'll also be watching for some ranges tomorrow. You know, as we go into summertime season, ranges are very common, so got some ranges I'm watching for tomorrow. Lots of great trades, though, on our radar to finish up this fourth week of the month of July. By the end of this video tonight, you'll know my favorite trades for tomorrow. More importantly, though, you'll also know some traps to avoid and traps to capitalize on if you're trading on your own or if you're trading with us tomorrow morning in our trade room. Now, of course, before we jump into the video tonight, as always, I just want to make sure to remind you, make sure you subscribe to our YouTube channel. I publish this video newsletter every evening with my best trade ideas for the following day. I don't want you to miss tomorrow night's video, so make sure you subscribe and make sure you hit that little bell icon so you always get notified every time we publish something new. And if you guys enjoyed the video as much as I enjoy making it, do me a favor, hit that like button, that thumbs up button for me here tonight on this video. Always appreciate you guys tuning in every evening. Make sure you subscribe, though. Hit that like button. If you guys have any questions, drop those questions for me in the comment section. But enough of the intro. Time is ticking. A little bit behind schedule here tonight. Let's get this video going here. Friday is right around the corner. Like I mentioned earlier, melt up markets. That's exactly what's going on right now. A very good example of what happens during low volume, kind of summertime trading. The S&P didn't even break 1 million contracts today, but you would never know it, right? Big moves up here on the S&P and the Nasdaq. I would love to buy some pullbacks, you know, kind of a very similar plan as we had in last night's video, right? I would love to buy some pullbacks. Would love to buy some pullbacks. I definitely have to assume there could be some ranges up here, so we definitely do want to be ready for where we may have some ranges here going sideways for tomorrow. And you know me, I am not afraid to get short on a bull market like this, but we do have to wait for some exhaustion, some reversal setup. So we'll definitely cover the reversals tonight in this video on both the S&P and the Nasdaq as well. Over on the gold, boy, gold looks, you know, last night I was very bearish on the gold, but as I mentioned last night though, right, we had that range, right? Now we're rotating back up. I'll tell you, we may get a slingshot reversal here on the gold right now. Boy, oh boy, how quickly things can change from one day to the next. We pretty much got that run lower, that bounce, and now we're trying to get that full pendulum swing reversal. I would love to buy some rips. I'd love to buy some breakouts right now on the gold. Gold's got some great potential for some strong breakouts going higher. The hard part on gold, though, is going to be buying the pullbacks. A couple spots there to buy the pullbacks on the gold. So you definitely want to make sure if you're trying to buy pullbacks on gold tomorrow, definitely want to make sure you watch the entire video tonight, because the pullbacks are probably going to be the harder part here on that yellow metal. Now, tomorrow morning is a Friday morning. We're going to break down all three of these markets tonight. Before we jump into this, these charts, though, let's make sure we're all on the same page for tomorrow, because we do have some big news tomorrow. The PMI report comes out at 9:45 Eastern Time tomorrow morning. This is a big deal for us, not just because the PMI number is an inflation number, but, you know, in our trade room, we usually see some pretty good setups around that 940 to 945 block in our trade room, right? It's kind of that sandwich between the 930 open and the 10 o'clock shock. You'll notice there's a lot of really good setups between 940 and 945. Tomorrow, though, yeah, we've got that PMI number tomorrow at 945. So this is definitely definitely a big part of tomorrow's game plan. Lately, summertime markets have not been that busy in the pre-market. Hopefully I'm wrong. But really what that does for me tomorrow is it really puts that emphasis on the 10 o'clock hour tomorrow morning, Eastern time, of course, right? 10 a.m. Eastern time tomorrow morning in our trade room. So, again, big news tomorrow, 9:45. We typically are looking for trades around 9:45. That's going to make it difficult tomorrow. I do anticipate to see a pretty good reaction to that PMI report, which means, again, that's going to kind of interrupt our flow tomorrow morning between that 9:30 and 10. So really, if I had to guess tomorrow, if you could only be at your desk for a half an hour, 45 minutes, that 10 o'clock to 10:45 block tomorrow will probably be where the easiest money is made. Now, obviously, we'll be looking for trades the entire morning session, right, tomorrow morning, and I would love to have you there, right there with us in the trade room. I'll put a link for you guys to come out and join us and come trade this stuff along with us. We open our trade room every morning, 8 o'clock Eastern time, Monday through Friday. I'll put a link down there for you guys to grab that link and get registered for not just tomorrow's trade room, but for every day, right? Our advanced membership is a lifetime membership, includes all of our trading sessions. So grab that link or hit that button below this video tonight on the trading blog, and hopefully I'll see you tomorrow and make you trade this stuff together. Again, we'll get there early tomorrow, right? 8 o'clock Eastern time. Hopefully we'll get something early before 9:30, because again, that time between 9:30 and 10 is going to be a little bit dicey, right? So that might put the emphasis on that 10 o'clock to 11 o'clock block flow, right? So be aware of that. Either before 9:30 or really after 10 o'clock tomorrow is looking like that's where the easier money will be. And if I had to guess, I would guess tomorrow that 10 o'clock block, 10 to 10:45, would be the best time to be at your desk. I'll hopefully see you tomorrow, though, at 8 o'clock Eastern time in the trade room. And, of course, we'll trade whatever the market gives us. But that's some heads up on that for tomorrow, right? Let's get back to our charts here. Got the S&P, the Nasdaq. Oh, and that gold is always ready here. I'm going to jump first here into the S&P. Don't forget, I will put chapters at the bottom of this video, right? A lot of you guys weren't aware of those chapters, so check out those chapters down at the bottom of the video. I would assume you'll watch the entire video, but if you want to come back and take a look at different spots along the way, you know where to find those chapters now at the bottom. Let's grab some S&P, shall we? Let's get this party started here tonight. Now, as I mentioned kind of in the intro, we've got what is obviously a melt-up market right now. These markets are moving on low volume. The volume is well underneath your kind of 6-month average right now. It's pretty typical, right, for end of July. Now, I'll tell you, kids, don't let anybody lie to you. Don't let anybody tell you can't trade the summertime markets. I used to think the same thing when I was a relatively new trader, but I'll tell you right now, there are plenty of reliable setups every day on these markets. We're not getting as much volume. There's a little bit of a slowdown. They're more inconsistent than they are during the rest of the year. An easy way to think about it is when the weather warms up, right, the markets usually, right, go a little bit lower volume. Yeah, it's a little more inconsistent. There's not as much volume, but don't let anybody tell you can't trade these summertime sessions, and certainly don't shy away from a Friday trading session. I hear way too many new traders saying, "Well, you can't trade Friday, you can't trade Monday, you can't trade this." I'm like, well, when exactly do you trade? Anyways, don't be afraid of trading tomorrow, and hopefully I'll see you guys in the trade room with us here. What's the key takeaway on the S&P right now? The key takeaway really is we had a bull market from yesterday, right, going into a trading range. And, of course, the market spent pretty much the morning, right, bouncing around back and forth. And we pretty much spent the morning, right, just buying the dips, right, below the low of that trading range. An afternoon push, right, that's what kind of got the whole thing going. And then, so you can see here, right, they let this thing rip. The most important thing right now is this is a very strong move, right? It is a very strong move. You can definitely tell they got their eyes on those all-time highs up there at 43.84.5. And it certainly feels like right now if these buyers just kind of, if the wind picked up a little bit, this thing would just float right up to that 84.5 up there to get those all-time highs. So I definitely do think the all-time highs are within striking distance. Most important thing, though, lot of momentum here for the bulls. Lot of momentum for the bulls. Any pullback right now has to be seen as a buying opportunity. So that's going to be what I'm looking for here for tomorrow. I want to find levels of support, right? Prior highs, channel lows. I'm also, like I mentioned earlier, I'm also watching to see if we're going to see some ranges for tomorrow as well. Because, anytime you see a big pop up, kind of like we saw yesterday, right? We saw that big pop up yesterday. It turns into a range. What do you do in a bull market range, right? You buy below the low of that range. We talked about this quite a bit, right, in last night's newsletter. So we're definitely anticipating a possible range on this. I want to be a buyer, right? What will be some ways to buy this market right now? I'd love to buy a pullback here. The best way to buy a pullback on this would be to trap in the counter trend sellers, right? What I mean by that is again, think about support levels right below this market right now, right? So if I can get a pullback here right now, down or below that channel, what I'd love to do is get one of those classic failure into pullback combinations, right, coming off of that low. What happens is when you get these strong pushes like this, if you can get a nice sharp pullback, right, underneath the moving average, the bears will come in and they'll see that as being a possibility to get short, right? That's exactly what we want. We want those bears to get short off that moving average. And then, of course, their stop losses are just, they're basically fuel for us to buy into it, right? If we can target buying into those stop losses, that's what I mean when I say trap in the sellers, right? Get them trapped in that short position and then hit them right where it hurts the most, right? Because at that point now, the buyers are buying and the sellers, right, are buying as well, right? Because they're now getting stopped out. Now, don't forget, you can usually grab that first pullback, right? That first pullback that comes after it, right? That's why I said earlier, a failure into pullback, right, combination, right? Now, some food for thought on this. If the market was to really pull back, really deep pullback, if I would see a much deeper pullback, what I would do is I would let the bears try twice, right? Let them try once, let them try twice, and then oftentimes these, what we call two-try failures, right? These two-try failures, they end up snapping and going into a trap. Okay, this is another kind of combination we see a lot. When you get these deep pullbacks like this, right? Again, you pull back, generally kind of good rule of thumb is you're underneath that channel, right? You get underneath that channel here. Because of that pullback is being so strong, it's still a bull market. It's not a reversal. We'll talk about reversals here in a second. It's not a reversal. It's just a deep pullback. Let the bears try a few times, right? I like to use the 2-try rule in my trade room. Their stops now are sitting right above that high, and we can now buy into stops, right? I always like to draw a little trend line right there and see if I can get a good signal off that trend line, right? Buying into those stop losses, and then again, buying that trap, right? It'll trap right below that prior swing on the way back up to retest the high. A failure into trap combination, right? Failure into trap combination. Now, keep in mind, guys, this is a 6,000 tick chart, right? I am not going to be taking these entries off a 6,000 tick chart tomorrow morning. What I will be doing is drilling down to a faster time frame and applying these failures and trap setups to try to trap those bears on the wrong side of the market. I'm not going to go into all the details of how I find the channels and qualify the entries and pick which spots I use, but I do cover all of that in a little quick start class that we have here at School of Trade. I wanted to find a way to kind of bring you up to speed in a really short period of time. So what I did was I got a quick start class going, and that'll kind of bring you up to speed with all the right time frames, the indicators, how to find support and resistance, and most importantly, how to use price action, not indicators. Indicators are lagging. Price action to qualify the entries. I'll put the little button up there in the upper right-hand corner for you. If you're here for the first time or if you're relatively new to trading, definitely grab that quick start class. It will hopefully save you a lot of time and money and losses and waste of time here trying to figure out how to do this stuff. So again, trapping in those buyers or those sellers, right, as we pull back. Another one of my favorites as we go would be a trap as we go higher, right? We know the buyers want that all-time high, right? So as we go higher here, one of my favorite, because we have all this strength, right? All of this strength, strong move up already, shallow pullback, higher high, right? Trap. Okay, that would be a fantastic trade. So if this thing pulls back shallow, goes to a new higher high, you know buyers are going to be drooling, right, over that trap. If you look closely, there's one right there, right? We saw one late in the day today. Strong move up, shallow pullback, higher high in price, trap, right? Same thing, right? Same thing. And this, by the way, is a very good example of what we talked about a lot last night and every night, which is don't worry about where you are, right? Lots of resistance there. But if you have enough momentum, if you have a good momentum and a good setup, take that trade, right? And we talk about this quite a bit in our trade room because, you know, it's easy to kind of shy away from good setups that happen in bad locations. Bad locations are not dangerous if you don't have momentum. It's a great example there of what we call a two-try trap setup in our trade room. Even though it's right into the highs, all of that momentum, take that trade, right? Take that trade. So kind of a follow-up there we talked about in last night's newsletter. So as the market runs higher, right, strong move up, shallow pullback, higher high, right, that trap, that will be a great way to get long on it. Let's say also too, let's say the market pulls back here and they jump off the moving average here, right? At that point, you know, again, I'm not looking to buy that pullback. I would like to get underneath the moving average, right? Trap in those bears, right? And then buy under stops, like I mentioned earlier. That would be how I'm looking to trade it right now. But let's say I'm wrong. Let's say, well, not wrong, but let's say the buyers have a different plan and they jump off the moving average. That's okay. Don't chase after it. You know, I would love the trap, but let's face it, right? I mean, I love that trap, but come on. If the market really jumps like that, it's probably not going to come all the way back, right, to get that trap here. So what do? You mark up that high, right? You mark up that low, and you buy that first pullback, right? You buy that first pullback. Now, when I say buy the pullback, let me be more specific. Again, this is a 6,000 tick chart, right? What usually happens at the low of those channels is you get one of these. You get, again, I'm going to drill down to a faster time frame, and you get one of these kind of combination setups. I talked about this earlier, right? So if you were kind of zoom in on that area right there, again, drill down to a faster time frame, it's a failure into pullback combination, right? It's usually a trap or a failure off the low of that channel. If you've taken the quick start class, you know what I'm talking about. If you haven't taken the quick start class, what are you waiting for, right? Grab that link, get registered, and you'll know what I mean when I say failure into pullback combination, right? This is a 1, 2, 3 break higher, right, into a first channel pullback. We're not literally buying the pullback. We're looking to trap in those bears and then buy the pullback as the market, right, races higher. All-time highs would be an easy spot to keep on your radar. Another way to buy this market tomorrow, this might be one of the easier ways to buy it. Let's say, for example, we go sideways here, right, on the chart. If we go sideways, that turns into a range. What do you do with a range? The range becomes a magnet. What you do is you find levels of support below the range, right, such as prior swings or my favorite, expanding triangles, right? Keep that between you and I, by the way, right? And then what do? You wait for the pullback. You wait for the bears, right, to come in, you know, and get short. And once they got their shorts on, you know they're stuck, right? And now all they're going to do is just wait for that nice strong green candle or just float that buy order right above that high and trade that snap. Now pay attention here, right? Pay attention. This is a really important part. Oftentimes this snap will now run. What you can do is you can take the amount we go below the range, the amount we go above the range, right? And that creates the target. Okay, now what you do is, watching closely, you want to grab that high, grab that low, and then draw that pullback, right? And again, I'm drawing this up on a 6,000 tick chart right now. You would drill down, right? I'll give you guys the details, all the stuff in that quick start class, right? So now you see what's up, right? It's a failure setup off support levels. That's the key. Support levels below the range, a failure into that first pullback, right? And that first pullback is usually going to be a bear trap, a failure into pullback, right? Combination off of that low. So really, I mean, this would be a great kind of combination for us tomorrow morning in the trade room. So we'll definitely be looking for that tomorrow on our radar here if we go sideways. All right, how do we sell this market right now? There are really only two ways to sell a bull market that finishes right at its highs like this, right? This is not a market that you want to try picking a top on. There's two ways to basically sell it. One is to wait for exhaustion. what I would do is look for that pullback, trap in those bears, right? Like I mentioned, get that retest of the high, and then watch those buyers exhaust. Watch for one, watch for two. Now, once those buyers try twice, that's when you know they're starting to run out of ammunition, right? They bought once, they bought twice. Now, draw that trend line down overhead, right? That trend line makes for a great short. Nice, strong red candle, right? And I can short after those two tries. Another way to do this is to wait for it to simply get below that low, right? And short into stop losses. This will almost always come crashing back down. And you know me, I want the follow-up, right? Anytime we see that much strength going down, there's a good chance it's going to come right over and do it again, right? So you want to short that next pop, right? Does that make sense? So again, remember, we're not trying to pick a top on this. We're waiting for the top to get hit. We're waiting for the buyers to try a couple times, right? Kind of tire themselves out up there, and then we can hit them, right, on the way back down. Where do we think the bears want to get to? They're going to want to get back to that range, right? That is a magnet, but I would imagine those lows down there at 43.40, right, would definitely be the target there for those bears. How else could I sell this thing? You could sell this after a reversal, right? So we may not get that exhaustion reversal, right? 1-2 back down. We may just simply pull back, for all I know, something will happen overnight. Market gets spooked, right? It pulls back. Now, instead of the sellers failing and going back up now the bears hold it and they jump off the moving average, right? What do we call that? 1, 2, 3 reversal pattern. Now momentum is swinging now, right? And now that range below us, there becomes a big bullseye right on that low, right? So if the bears can take control like that, if the bears can get what I call a 1, 2, 3 reversal, and no, I'm not going to sell that first pullback, right? It's very difficult to predict which pullbacks will be reversals. It really is, right? So wait for it. 1, 2, 3. Once you get that jump off the moving average, again, don't forget, it doesn't matter how strong the pullback is. The pullback leg can be very, very strong. The bears have to prove to us they actually have the guts to hold that pullback. Once they hold it, now it's bearish. Mark that low, mark that high, drill down again to a faster time frame, right? Find your bull traps, find your failures, find your pullback entries, those price action entries, right? I talk about up in that quick start class in the upper right-hand corner. Those are the two ways that you want to sell this market here for tomorrow. Now, there will probably be a couple more that I'm covering here tonight. Try to keep this video relatively short, right? We'll go forward from here. I'll fill in any of the missing pieces tomorrow morning with you guys in the trade room, right? But that will give you a pretty good plan of attack here to buy it, sell it, and how to trade that range. That range could easily come right on our radar here for tomorrow. All right, how about some NASDAQ? NASDAQ is very similar, right, to the S&P 500. NASDAQ, of course, had that strong move up today into a trading range. And what do you do? What do you do when a bull market goes into a range like this? Whatever could you do? You find levels of support below the range, and what do? You rope in those bears, right? You rope in those bears, right? And you buy into those stop losses. Then what do? You mark up that high, you mark up that low, and you buy it right on the pullback. We just talked about this, right? We just talked about this guy right there, right? It's the failure into the pullback. So now we're partying, right? Now these buyers, right? They're literally on the moon right now. I was gonna say they're on cloud 9, but right, they're almost on the moon right now, almost all the way back up, right, to that all-time high, and of course that round number at 15,000 on the NASDAQ. Pretty incredible to get t-shirts made up for our trade room tomorrow morning. Anyways, all kidding aside, very strong momentum move, right? Very, very strong momentum move. We know these are called open loops in our trade room because they leave the door open. They leave the window open, right? The loop is left open. We know that anytime we see this much strength in one direction, we are almost guaranteed to retest that high, right? So buyers are, again, notice that almost guaranteed, right? Nothing is ever guaranteed in these markets, kids. So almost guaranteed, right? We're going to retest of that high here. Any pullback right now, we assume, is going to be seen as a buying opportunity. Now, just like on the S&P, when I have this much strength, my job right now is to look for ways to trap in counter trend traders, right? One way to do that would be get back below the moving average. This is my favorite way to do it, right? Get back below the moving average, get those bears, all those poor bears, to try to short, right? Try to short off that high. And I'm still amazed how often this happens, because it's like, who in their right mind is selling this market right now? But I'll tell you, I recall being a rookie, 15 years ago and thinking, oh, this has gone too far, I'm going to short this, right? That happens all the time, right? It's amazing how convincing we can make ourselves how to short a bull market sometimes, right? Remember, when you got this much momentum, though, do not fight that direction. Let some other poor sap, right? Let some other poor trader short off that first pullback, and then you just got to wait for those stops to get hit, right? You could buy right into those stop losses. I would love to get one of those failure into pullback combinations off of that low, right? We're trapping in the bears, we're buying into stop losses, we're buying that first pullback, and the target, of course, is back up to retest the high. I think you'd be foolish not to leave a little bit, right, on that, up to that all-time high at that point, right? So definitely try to leave an extra contract on there, right, to be the runner. I believe I have a blow-off top up there at 15.025. If you get an extra contract, that 15.025 blow-off top would be a decent spot, right, to leave an extra runner for tomorrow. Another kind of thing to kind of keep in mind on too is, remember, got that channel here. I would love to buy around the low of that channel, but if we really get underneath that channel good, at that point now what happens? The bears are going to get more aggressive, right? They're going to start thinking this range is the new magnet now. Let them try twice. Let them try once. Let them try twice. At that point, again, one of my favorite things to do is draw that trend line, right? Look for that nice, juicy green candle. Their stops are sitting right above that high, and we can blast it, right? We can buy it right where it hurts the most, buying right into those stops. And then don't forget, when you get these really deep pullbacks and those bears get caught, what happens is it almost always snaps, right? And when it snaps like that, you don't get that pullback right away. I would love that pullback, but just be aware, if it really pulls back deep, it may not give you that little pullback right there. It may just go, see ya, and just run. And if that's the case, all you got to do is just simply stay patient and wait for a trap. Right? The trap is kind of always your best bet, because at that point now you're way up top, right? You're way up top up there, so you're better off waiting for that trap, right? So again, it's a two-try failure, right? A slight variation of those failure setups we keep talking about, and of course a trap entry, because trap entries are always going to be your best bet whenever you've got a lot of momentum, but you don't want to chase it, right? You don't want to buy too high up there. So really, great combination setup right off of that low. And again, this is a 4,000 tick chart, right? I'm not going to trade the stuff off a 4,000 tick chart. We'll drill down, much faster time frame, and I go over all the time frames, all the indicators, how to draw your channels, how to find your ranges, how to find support and resistance, and of course, how to trigger the entries using price action, right? Don't use indicators. I keep seeing people saying, I use divergence, I use MACD crosses, I use all these indicators. Indicators for entries are going to get you in too late, right? We can do a lot better than indicators. I'll teach you more about that stuff, again, in that quick start class in the upper right-hand corner. Now, what if we go higher here? Right? If we go higher, it's basically same basic idea as the S&P, right? If we go higher here, strong move up, shallow pullback, right? Strong move up, shallow pullback, trap, right? Trap will always be great in that situation, because again, you've got so much momentum. Right, there's so much momentum going higher here. That shallow pullback will drive the buyers crazy, right? It'll drive them crazy because they won't be able to get in on that shallow pullback. The higher high creates the FOMO, right? The higher high creates that, oh my goodness, I've got to get in. Okay, there's my trap, buy it, right? That's the key to that setup. And then again, if it pulls back for us, if I don't get that failure I want, and the market just simply jumps off the moving average, Remember I said earlier, don't worry about where you are. If you have enough momentum, mark that high, mark that low. You want that first pullback, right? And again, when I say pullback, usually it's a bear trap, it's a failure, then into a pullback, right? Because usually it goes well below the moving average, right? And you get those failure, right, into pullback, right, combinations, right? So if you were to make that example smaller, right, and put it up there, right, that's exactly what you're looking for off the low of that channel. So you got some really nice options here if we do go higher. You'd be definitely wise right now to also think about a range up here. Again, it is summertime markets right now, so just like today, right? We jumped up. Go into a range here, we pull back. When you see those ranges and you go sideways like that, find support, trap in those bears and hit it, right? And hit it. It's easy if you know what you're looking for. The key is once you start seeing the backfill, right? The moving average starts to flatten out a little bit, right? You're not seeing the personality slows down, right? So what do? Again, you find those levels of support below. Right, you wait for that pullback, okay? Then you wait for the moving average to get hit. The bears come in, they get short. They're usually pretty obvious, right? Stuff like that, right? They pull back, the bears come in, get short. It doesn't take a microscope to see these things. They're usually pretty obvious. The bears get short on it, and once they get short, right, we can buy into those stop losses. And then don't forget, grab that new channel, right? Grab that channel and hit it again. Because you're almost always going to get that pendulum swing. This again, especially with all this momentum, right? With all of this momentum, when it pulls back underneath that range, that failure, it's going to snap higher. It's almost a guarantee to get that pendulum swing, right? Because of all the momentum, right? It's a bullish overall trend, and it snaps higher, right? It's just what we see back here. Right? This has been so common this summer. It's been laughable almost in the trade room, right? Run down, failure, and then snap up, right? You got that, right? Again, you're buying that first pullback, right? Complete that pendulum swing, and obviously there was no way to know it would just blammo, right? And run higher. That's why I said melt up, right? Melt up, these melt up markets. Watch out for that range. Buy below low of that trading range. How do I sell this market? The same way I would have sold, right, the S&P, right? We know this market is very likely right now to pull back and retest the high. Buy that pullback. Then wait for the buyers once. Wait for the buyers twice, right? Draw that trend line. Find those stops, right? Sell right into those stop losses, right? Either you're selling the trend line, you're selling the stops, right? You're grabbing that new channel coming over, right? And you're drilling down and you're shorting, right, off of that off that channel. Also, to keep in mind, sometimes these things really go right. They really fail, right? So let's say, for example, one variation of this, we may see the pull back, we get long off the failure, we go back up. Then something that happens is the market will collapse, right, and run back down again. If that's the case, mark that high and look for that trap there. Okay, it's kind of the same thing, right, where it comes over, right? You've got that kind of double top reversal there. All of that momentum now shooting lower, strong move down, shallow pullback, lower low in price. That trap is a great trade as well. So again, it's kind of the same idea, right? It's still buyers trying once, buyers trying twice. It's still an exhaustion move. It's just at this point now we need that trap because we don't want to be selling. We don't want to chase after it. Let's put it that way, right? We don't want to chase after it. So traps are going to be on our radar, right, as it come off that high. And then for some crazy reason, if the market says, nope, we're done, and we simply pull back, right? Another way to short this thing. The bears do not fail, right? The bears don't fail. The bears hold, and we jump off that moving average. What do we call that? We call that a 1, 2, 3. Okay, remember, this is not a range at this point, right? This is not a range. Okay, this is a trend market at this point, right? Not a range we saw back here, right? Ranges are different. Ranges, you've got to get below the range and hold the pullback. All right? Makes sense, right? If it's a range, you have to get underneath the range and then hold the pullback. If they don't hold the pullback, they're going to keep running right back higher again. However, on a trending environment, if they just simply get the pullback, they hold that moving average test. And again, it doesn't matter how strong the pullback is. It matters how strong that jump is. How strong is that jump? If it pops, if it rips off that moving average, you know now there's a big bullseye right back at these lows now, right? The other side of that trading range. Mark up that low, mark up that high, drill down to your faster time frame, right? We're not going to trade a 4,000 tick chart, not for day trading, right? And we're going to short that first pop right off of that high, right? Again, we'll do all this together tomorrow morning, every morning in the trade room, right? 8 o'clock Eastern time. I'm pretty excited. We usually have a way of finding some really good trades on a Friday morning, so I'm pretty excited for. And again, don't let anybody tell you can't trade you can't trade a summertime Friday. Just be selective, right? Be selective, especially for tomorrow around that news at 9:45. How about the gold? How about the gold here? Wrapping things up here tonight on the gold. Boy, what a difference a day makes, right? Last night, I was talking about, how much I wanted to, right, short, right, off those pops up there. Didn't get it until later in the session here, but instead, what do we get, right? What do we get? We got that strong move down, right? Strong move down, bears once, bears twice. We talked about this last night, right? That pop up, right? And then trading that rotation. If you watched last night's newsletter, you were ready for, right, this scenario here today. So what's the key takeaway? What's the key takeaway here on the gold right now? The key takeaway is it's a range bound market, right? It's a range bound market, and we are now rotating, right? We are rotating here up off that low, right? I've marked up the amount below. I've marked up the amount above. We get a pretty good idea. We know where this market wants to go right now, right? That 1814, 1815, level there up overhead. Ranges are magnets. But as we talked about a couple times already on the S&P and the Nasdaq, when I get these markets to go below, right, and then of course they try a couple times, right, and they snap higher now, we can oftentimes again trade that rotation now all the way back up, right, in the opposite direction here. Now, that's the general idea of this, right? That is the general idea. The hardest part about this market right now is we don't have a lot of momentum. We did have some great momentum with that strong move up right there, right? That strong move right there is one of those strong moves where you go, okay, we're going to probably retest the high, right? So you find whatever way possible, right? My favorites are always failures, right? Off that low. So we know the buyers had their open loop, as we call it, right? They got their retest now, but see what's happening right now? They're not exactly showing off their muscles here right now. This is not exactly a very strong bull trend. We've got the bulls in control. We know where the market wants to go right now. Our biggest problem is momentum. Now, I think the easy money will be the move going higher. I think that will be the easy money, because what oftentimes happens is you get these slingshot reversals, I call them, right, where they just blow right through this, right? See example from the Nasdaq, right? This is what the gold buyers want to see tomorrow, right? The gold buyers, they want to see this thing coming off that low and ripping higher, right? That's exactly what the gold buyers want. That's why I say tomorrow, being a buyer on this as it goes higher might be the easier money here, because, right, there's your range and they're ripping, right, trying to rip that thing going higher here. The harder part on gold is going to be the pullback, right? Because the pullback puts us, and remember, there's not a lot of momentum right now. So I really can't just say, well, there's a lot, again, if we had this, right, if we had that strong move, I'd be saying buy that pullback, right? I'm still going to want to buy the pullback, but I have to be careful, right? Because we don't have that momentum. That's the one thing about these pullbacks that I don't like, is we don't have a lot of good momentum right now. So we have to either create that momentum going higher, or we have to, again, trap in the opposite side of the market and use their stops as fuel to get that momentum going, right? Does that make sense? Right? Like I always tell my clients in trade room, if we don't have good momentum, we have to then trap in the other side of the market to add fuel to the market, right? To kind of grease the wheel, to create that tension in the market. Anyways, so how do we buy it? We're bullish right now, right? There are some great sell setups here, and we'll talk about that here in a moment. How do we buy it? Buying this thing, again, as it goes higher here would be kind of the easy part. One kind of interesting trade I would like to see here tomorrow would be if we saw a strong shot higher here. This trend line, of course, continues coming over here. If we can get that strong shot higher, that trap could easily turn into a trap, into a failure, into pullback combination, right? You've got three, price action setups: trap below the prior low off a trend line, right? Trap, failure pattern, and then pullback pattern. Again, I'm just simply, drawing on the screen right now. This is a 1500 tick chart, right? We'll drill down to a faster time frame and take those trades, right, on a faster time frame. I also wouldn't mind, as the market rips higher again, I wouldn't mind taking that same two-try trap as we go, right? So strong move up, shallow pullback, trap, 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 right below those lows. Again, you're trading that slingshot, right? That slingshot reversal. Where do you think the buyers want to go in that situation? Where do the buyers want to go? Yeah, they want to go back up to that big range overhead, right? That big range up there at 1825 or so. Now, we may not see that strong move up, shallow pullback and go. The market may just simply grind, right? It may have its own melt up, right? If that happens, don't chase it. Mark the high, mark the low, wait for that price to get below the moving average, right? Trap in those bears, failure, pullback combination off of that low, right? Does that make sense? So again, if we go higher, shallow pullback and pop, right? Traps, right? Traps. But if that pop turns into real pop, right? Now what do? You mark up the high, you mark up the low, because you're not going to trade it. You're not going to get a trap all the way back here. It's not going to pull all the way back right there, right? If it really runs and doesn't give you that trap you want, right? Just wait for that channel pullback. Again, drill down to a faster time frame. And these are usually going to be those bear traps, those failures, right? Seller failures off the moving average, and those pullback, all right, combinations. Okay? The hard part about this one now is going to be if we pull back. If we pull back, what's our problem? No momentum. So what we're going to do is we got to get the bears stuck, right? So here's the way to do it. It's not that difficult. The one challenge we have is the middle of this range is going to be a little bit of it's going to be a little tough. Okay. Again, I wouldn't be saying this if this was really blasting, right? I wouldn't be saying that whatsoever right now. But because it's not blasting, and in all reality, right, it might be trying to come back into that range here. What I'll do is I'll give the bears the benefit of the doubt. Let them try once. Let them try twice. If the bears try twice on that pullback, again, I'm watching that trend line here. If the bears try twice, now look for that same, two-try failure into trap combination, right? Two-try failure into trap combination. We've talked about this a few times already, right? So you should be hopefully familiar with this, right? With this kind of combination setup. The two-try failure will oftentimes really jump. Right? When it jumps like that, grab the trap afterwards. Two-try failure, right? Trap entry. Target is where? Yeah, up at the 1814, 1815 area, that pendulum swing overhead. Now, if we go even lower than that, the next step is, sometimes what happens is they kind of make a pendulum instead of a pendulum swing. So if we go even lower than that, okay, let's again, if we pull off the trend line 1, 2, and go, but let's just say, for example, they go even lower than that, and we go back to this area now, right? Now watch that area right there. At least for right now, it's at 1798 and change here. Try to get down to that area. Now at this point, that trend line becomes the best friend for who? The sellers, right? Let those bears now try to get short. Right? And once they do that, you got them, right? You got them right where you need them, right, to buy into those stop losses. It's kind of a failure pattern. And again, see what I'm doing here? I'm taking the amount above, the amount below. That gives you a general area to look for. And then as we pull back here, again, you could assume those bears are going to come in and they're going to go, oh, yes, please, right? Grab that short. That is not nearly enough momentum to sell a bull market that's rotating off the lows like this. That is not it's not the place where we're going to see consistent results getting short here. I'll talk about some shorts here in a second, but that short off that low is just asking to fail, right? And rip, right? And really rip going higher here. That would be how I would trade, right? That deeper pullback, pendulum, trapping those bears, again, because we don't have a lot of that momentum. Last but not least here, how do we sell this market? Let's say, for example, right, we finish off that move higher, we get the pullback, we retest, exhaustion, right? Exhaustion reversal here, buyers once, buyers twice, right? Now, at that point now, our biggest hurdle is going to be that trend line. We'll have to wait and see kind of where that trend line looks at the time, because if it's really tight, we really don't want to sell into it. What we meant to do is get underneath it and use that trend line, right, as a level of resistance, which, as you can recall, will be lined up right with that channel, right? We've talked about this before, right? To try failure into that first channel. That first channel, and this will all depend on kind of how we get there and what it looks like when we get there tomorrow. Maybe we do have space, right, for a 2-try reversal off the high. Maybe we don't. And we got to wait for that little breakout pullback, right, and short off the top of that channel. And then, of course, the party's on, right, going back down the other side of that trading range. What if we don't get that? What if we just collapse? Right? What if the market, it may go sideways here for a while and then, right, and then race. If it races lower, one of the things you always look for is those trap entries, right? We're probably not going to get this perfect, 1, 2, 3 reversal, right? And even if we do, I'll still be looking for those 2-try traps. So again, we got to get a lot of momentum coming off this high, because again, we're rotating here. I can't sell that first one. But if I can get this thing to really start to roll over here, grab that trap before we retest the low. Okay, it's not going to be easy, right? We'll have to wait for A, the momentum to turn, and then B, that trap, right, to avoid selling into those lows. Remember to also find those channels, right? Find those channels coming off those lows. Always increase your odds of success. Would it be possible that we go all the way back to that low tomorrow, right? Getting one of those 1, 2, 3 reversals. The bears come in, right? They try once, they try twice, and we hit them again? Absolutely. Is it possible, maybe possible, that we see something very similar that we saw here today, right? Where they go down, take out that low, 1, 2, pop, right? And then again, find that, right? Find that new channel, wait for that pullback, trap in the bears, and go again? Yes, absolutely, right? Absolutely. Rinse and repeat. The range is the magnet. Find levels of support below the range. Okay, in this example, it's an extreme example because you're so bearish, right? So let them try twice. And then again, once those bears fail, hit them again, right, on that first channel pullback. Love those 2-try failure into new channel pullbacks as we rotate back and forth. All right, guys, there will be more. There will be more tomorrow. There definitely will be. Remember, early in, early out for a Friday. Careful around that 9:45, right? Either you want to get them early or you want to get them really after that, 9:50, 10 o'clock shock tomorrow morning. And, of course, we'll go over all the smaller details tomorrow morning in our trade room. All right, guys? Keep an open mind tomorrow, right? Don't commit only the buy side. If things flip around to the short side, right, trade the short side. But again, right now, though, it does look like these buyers are well in control. We'll know more tomorrow. Hopefully, I'll see you there in the trade room tomorrow morning, every morning, Monday through Friday. I would love to have you there. Join me up, right? I'll put all of the links you guys need to get registered. I'll put those in the description of the YouTube video. I'll put a big button for you also below me tonight on the trading blog. Don't be afraid to call the office. I'm always here to help if you guys have any questions. I got live chat on the left, live chat on the right. Hope you learned a bunch in tonight's video, and hope I'll see you tomorrow to trade it right along with us. As always, guys, my name is Joseph. Be well out there. Be nice to each other, will ya? If we don't see you guys tomorrow, have a great, great weekend. Come back and see us next time, all right? Adios, amigos. Bye-bye for now.